Back with Midcap Masala, let's talk about an earnings candidate and very strong Q2 earnings coming in from Anand Rathi, the group. They've done very well. PAT is up 30% year on year. Active client base too up 16%, so looking very healthy. Let's interact with the management. We have Mr. Anand Rathi, founder and chairman of the Anand Rathi Group, joining us on the show. Mr. Rathi, good morning and congratulations on a very good set of numbers. The numbers this quarter have been quite strong. What were the key drivers behind this performance, if you could help us understand?
See, basically, I think first and foremost is our customer centricity. Our customers, we don't lose our customers. Also, on the other hand, when markets have been bad in last quarter, our people, our customers still invest because we always believe that the investment should continue irrespective of the how markets are doing. Because if you are doing long-term investment, in fact, the lower markets are a good opportunity. And that's why if you see our inflow this year compared to last year is almost double.
All right, Mr. Rathi, firstly, congratulations on a great set of earnings. But what's the guidance for FY26 in terms of your revenue, PAT and AUM growth? If you can share some numbers there. And what are the key levers that will drive this growth and what's the rationale behind your expectation?
We had given the guidance of revenue of 1175 crores. We have achieved 50% of that in 6 months. We have given a profit target of 375 crores. Compared to that, we have already achieved 52% of the target. So I think we are very confident that the revenue targets and profit targets which we have given will be achieved.
Right. Okay. Mr. Rathi, let's talk about your margins. They've expanded by 332 bips on a year-on-year basis, but on a sequential basis, slightly under pressure, down by roughly 40 bips. Are the current margin levels sustainable going forward, or do you foresee any pressure on your margins and profitability?
No, I don't see, because if you see consistently for last 4 years since we have listed, our margins have always been around 44 to 45%. Okay, and this can change quarter to quarter, but on the whole, the margins, in fact, margins can increase because as base increases, the impact of fixed cost keeps on coming down, and therefore the margin are unlikely to go down in future.
All right, but Mr. Rathi, active client base, they have seen a surge of 16% on a YOY basis. What kind of a sustainable growth trajectory do you expect in this metrics over the medium term, say?
I think our client acquisition should be 15 to 20% year on year. This is what we have been achieving, and I'm sure this will be continued to be achieved because, we are getting clients are being taken by the existing relationship managers, plus we keep on adding new managers. So new clients are acquired by existing clients, where we have just about 32 per RM, which can go up to 50. So the huge capacity, and because of the good performance of the portfolios which we manage, we are able to get huge amount of references from the existing clients.
Okay, and Mr. Rathi, which sectors are looking the strongest in terms of growth levers? Which are the most attractive, and what's your outlook over some of these sectors for the next 12 months?
Yeah, I believe that basically, first and foremost, I tell people, don't go by sector, go by each company. Because within each sector, there are companies which are excellent, which may not be excellent. But since you asked about sectors, I think infrastructure is going to do pretty well. Now with the GST coming down, the FMCG FMCG and all the consumable goods should do very well. The banks, because the interest rates of course slightly came up, but if the inflation continues to be low, I think banking sector and NBFC sector should well in coming years.
All right, and also Mr. Rathi, what's your outlook on commodities, particularly gold?
Well, basically, we don't really do much, but gold is too volatile at the moment. I think the way it has gone up, I think, and a lot of time it goes up when there is a huge amount of speculation in any commodity. So I would say that at the moment, I would not advise people to take position on gold. I think historically, if I take last 50 or 100 years, gold return in long term is equivalent to the inflation or little higher than inflation. But yes, when spurt comes in gold, silver, it comes at a time. Then many years, you have seen in the past, for 5 years, it doesn't go up or it may come down. So I think, it's a more risky bet. I think people who want to do more risky thing, for them it's okay because volatility is too high. For an average investor who wants to make reasonable, return of 12 to 15%, I think equity markets and particularly mutual funds are the right option for investors to go.
Okay, Mr. Rathi, really appreciate you joining us. And once again, congratulations on the stellar set of earnings for quarter two. That stock is up about 10% as we speak.